Good afternoon, my dear friends in Southeast Asia. I'm Michael Lu, U.S. Grants Council Taiwan Director based in Taipei. I am thrilled to attend this conference. Today, I would like to talk about when will China end its massive import program for soy and corn. This is not a simple answer to reflect this big question because China market is too complicated and dynamic with some non-financial reasons behind, which would deeply influence the market volatility. You should know an ancient India parable, blind man and an elephant. You can ask five Chinese people about the opinion of Chinese market and very possible you will get six different answers. Humans tend to claim absolute truth based on their limited subjective experience, as they ignore other people's opinions, which may be equally true. I would say there is no Chinese market expert. The best way to penetrate Chinese market is trying to widely capture the market information from multiple dimensions and then digest all the elements become a whole. My presentation is not a standard answer, but just provides you a reference way to consider the market trend. Let's see the population growing trend in China. China population is officially over 1.4 billion, with 14.65 million newborn babies in 2019. However, there were only 12 million babies in 2020, the lowest rate in 6 decades. Currently, the fertility rate in China is 1.3, one of the lowest in the world. China's population is expected to start declining by the end of this decade. A peak in China's population growth is now expected by 2025, with the total population of about 1.42 billion, and then India is expected to replace China as the world's most populated country. Even though China's population is trending lower, 1.4 billion is still a huge number with strong food consumption. Furthermore, the urbanization rate is steadily increasing. Urbanization is driving economic development in China. There is no doubt that what will happen in the cities will have a huge impact on the entire country. It would also result in high food consumption as well. If China can continue moving rural population to urban areas, like the black line B on the slide, then less land is lost from agriculture. Farms can be consolidated to be larger, and yields would be higher by leveraging efficient farm management. But if it's going with blue line A, then corn acreage and yields could be lower. China grains and oilseeds imports volume totally increased about 25% in 2020 year on year. 2021 would be the similar level as 2020. By each product, soybean imports of 101 million metric tons in 2021, which is the first time exceeding 100 million tons. Corn imports of 26 million tons, up 242% from 2019. Wheat imports of 10.62 million tons, also up 97% from 2019. Barley imports of 8 million tons, up 36% from 2019. And rice imports of 4.2 million tons, up 62% from 2019. China is the largest importer of soybeans and vegetable oils in the world. China imports 1.5 times more soybeans than the US crushed. China depends on these soybean imports to produce two-thirds of all domestic food oil consumption and the byproducts soybean meal to be fed to animals for meat production. China's vegetable oil consumption consists of 75% imported sources of oilseed and oils in current year. Per the slide, you can see the pink bar is total oil from imported sources, including crushed from import soybeans and directly imported oils like palm oil and soybean oil. The green bar is total oil crushed from domestic oilseeds like rapeseed and cottonseed. Next slide is the question to you. Do you think which number is close to China food self-sufficiency rate? China official number is 95%, but it is only referring to grains sufficiency, including wheat, rice, corn, and even the starch plants like yam and potatoes. China must try every manner to maintain the high sufficiency rate of grains to avoid their people suffering starving. Since people are getting richer, they won't satisfy with being fatful, but eating good and tasty, with higher oil and meat consumption. Thus, the self-sufficiency rate is down to 82% if including soybeans, oils, and meats. Is 70% self-sufficiency rate too low? Not really. It is referring to all kinds of agricultural products, and about 30% need to be imported from abroad for well managing the supply and demand balance. I would say nobody can precisely come up China food self-sufficiency rate due to the dynamics. Let's get back for today's key focus, corn and soybeans. This slide shows China corn supply and demand. Starting from 2017, Chinese corn production is lower than their own domestic use, and the gap is keeping widening. USDA projected 26 million metric tons corn imports for both 2020-21 and 2021-22 marketing years. However, do you know when USDA just realized China massive imports? As you know, USDA WAXD report is the key indicator for futures market. Last year, in early May 2020, CBOT corn futures price was 310 cents per bushel. At the time, USDA projected China would only import 7 million metric tons of corn for 2020-21 marketing year. This 7 million metric ton projection was lasted for 6 months. Till November 2020, USDA raised China import volume to 13 million metric tons, but corn futures price was firming up to 428 cents per bushel. The traders who deeply participated China day-to-day market operation had built up the long positions already. At the time, many people were wondering why China can import such a big volume since their annual quota restriction is only 7 million metric tons. I have a good friend who has been dealing grains business in China for decades. He told me an inside information that don't trust there is any quota restriction against those state-owned companies. The Import Quota Authority is China National Development and Reform Commission, we call NDRC. As long as state-owned companies would like to import corn, they just walk to the next door to get their quota application stamped by NDRC. Actually, NDRC is not just next door to the state-owned companies. What he meant was it's easy to get extra quota if state-owned companies really need. He also told me he has an extreme bullish view on the corn market at that time. Then you knew the result? After that, USDA raised up China corn import volume month by month. December 2020, up to 16.5 million metric tons. January 2021, up to 17.5 million metric tons. February 2021, up to 24 million metric tons. And then May 21, up to the current volume, 26 million metric tons. Meanwhile, USDA also projected the same number of 26 million metric tons for 2021-22 marketing year. And CBOT corn futures has roared to the peak at 732.5 cents per bushel. If you had the information channel and follow the right trend, you will have a fantastic return for this round. That's why all the grains companies, including those international big giants like ABCD, must have their own people step in China market. Even though you may not earn the money in the local market, you can get the real market's information for you to better position yourself. Before 2000, China kept massive stocks, which would be the political orientation for national food security. The stocks-to-use ratio had ever been higher than 100%. In order to establish foreign exchange reserves and develop the whole country economy, China started to export their corn stocks and also be fed to animals for the increasing meat demand. When I was a grain trader's work for Cargill, I had ever bought Chinese corn to export to Korea, Japan, and Taiwan. Not only state-owned companies, but also province companies were trying to sell their corn stocks abroad. I had ever got China Army's corn stocks. Corn packed in burlap bags were delivered by military trucks to Dalian port. During that period, I often heard China local cash corn market would be on fire because the government auditors would go to check their inventory. Those companies who oversold must urgently refill their stocks to be aligned with their inventory on paper. Now, China is the net importer of corn. However, size of China corn stocks today remains as a state secret. However, corn stocks appear to be burdensome for domestic prices, resulting in government action to curb imports. China corn yield per acre is much lower than US corn. US corn yield is close to 180 bushels per acre, but China corn yield is around 100 bushels per acre, which remain low by international standards. Chinese government is encouraging the adoption of modern agricultural technologies, such as gene editing, synthetic biology, and AI, to boost the seed industry and the yields. However, the long-standing obstacle has been existing how to win Chinese public acceptance of biotech crops. GMO seeds have not yet made it into corn and soybean planting. The 43 billion US dollar purchase of Swiss agriculture tech group Syngenta by the state-owned company Chemical China could well hint at a bigger move in this direction. China's corn yield trend is growing at 1.33 bushels per acre per year, whereas the US corn yield trend is growing at 1.87 bushels per acre per year. China corn area is 42 million hectares, which is equivalent to 104 million acres. So China is gaining 138 million bushels per year, which is equivalent to 3.5 million metric tons per year. However, the demand increasing in China would even higher than the supply growth. Let's look at corn prices in China. The prices are still high. The green line is the price of domestic corn in South China, and the orange line is the price of domestic corn way up to Northeast China, which called as the surplus production area. The price of US corn landed in China, which is the purple line, have peaked close to parity of China domestic corn due to, first, rising US prices, including both FOB basis and futures. Second, rising freight rates. And the third, RMB Chinese currency appreciation. In beginning of my presentation, I mentioned blind man and an elephant. Actually, China market movement is like a big running elephant. Once it starts running, the big momentum would hard to stop immediately until overacting. Please look at those prices line, which all broke the record high couple months ago, and now softening a little bit. One indicator is worth noticing, which is cargo washout. It is contradictory that you will see China is buying cargoes, but on the other hand, wash out the previous procurement simultaneously. Don't feel strange. It could be a signal to see the market retracing. I learned that in the past months, China has washed out several cargoes of corn and beans. Let's see if the indicator works. Let's also talk about China's soybean supply and demand. China domestic beans production is far behind their total demand. The local beans production is around 20 million metric tons, to be declared as non-GMO beans for direct food use. According to USDA, China's soybean imports have also been tracking higher, reaching a record 101 million metric tons in 2021-22 marketing year. China imported US beans over 50% more in 2020, as supply disruptions in Brazil make additional US cargo purchases. A key factor behind surging soybean and corn imports has been China's need to build up and feed its hog population following an outbreak of African swine fever. By some estimates, the virus had wiped out half of the domestic hog population in 2018 and 2019, which has since been built back to nearly 90% of previous levels. China didn't maintain high soybean stock before 2000. The stock-to-use ratio is below 20%, not like corn with high stock-use ratio close to 100%. As soybean were likely treated as a specialty crop. China's 101 million metric tons of soybean imports require about 83 million acres in Americas. If planting corn, it would be equivalent to about 13 billion bushels of corn. Due to the limited farmland, it is impossible for China to keep self-sufficiency for both corn and soybeans. China meat production is trending higher. Imported soybeans provide soybean meal for meat production, and the demand of feed grains are also rising sharply in the last few years. The exception is in 2019 and 20 because the outbreak of African swine fever, which significantly causing the decline of pork production. The new capacity of hog raising farms has been industrial style, large-scale hog operations, which use a huge amount of corn and soybean meal crushed from soybean to mix their compound feed. Let me show you two examples. The right-hand side picture is Muyuan Food Company, newly built multi-story pig farm with 84,000 sows in Henan province. The production is about 2.1 million pigs a year. The left-hand side picture is Yangxiang Company's high-rising pig farm with 30,000 sows, nestled in the mountain of Guangxi province. These new farms with huge and industrialized hog breeding facilities are replacing small traditional farms, many of which were wiped out by the worst animal disease outbreak in the past couple years. These modern pig farms utilize more corn and soybean meal to design the formula of animal feed, with higher feed conversion rate, which will push up the demand of corn and beans. China must tremendously impact on commodities markets, not only in agricultural products, but also in metals and energy. The sizable China's population and the rapid improvement in the quality of life has created a continuous demand for most agricultural commodities. So, will China's appetite for corn and soybean ever end? I think the answer would likely be no. China would not end its massive import program in short term, but just temporarily be slowing down. Thank you for your listening. Appreciate your comment and feedback for my presentation, and hope we can meet each other in person next time.